This week, what if the most meaningful belated Christmas gift an older homeowner could give to their family wasn't under the Christmas tree, but instead provided stability, space, and a place to call home? This week, we're going to examine how some grandparents may be able to use a reverse mortgage to help their adult children to stop renting and enter into home ownership, seeing their gift put to good use during their lifetime. We'll go into all this right after a short message from our sponsor, Liberty Reverse Mortgage.
Liberty Reverse wants to help you grow your reverse mortgage business with our proprietary Equity IQ product suite. Equity IQ gives your borrowers access to more funds, lowers their upfront costs, and expands eligibility for home purchases. Learn more at partners.libertyreversemortgage.com today. This ad is intended for mortgage professionals only and is not a consumer solicitation. PHH Mortgage, doing business as Liberty Reverse Mortgage, is an equal housing lender. NMLS number 2726.
Welcome back, and thank you for joining us. For many older homeowners, the idea of using a reverse mortgage still raises a familiar concern. Isn't that something you only do if you're running out of options? But for a growing number of families today, a reverse mortgage is not about desperation, it's about intention, impact, and in some cases, helping an adult child finally escape the endless cycle of renting. The housing affordability crisis is not going to end anytime soon. In many markets, mini rents are now hovering around $2,700 a month or more, and that's over $32,000 a year paid each month with nothing to show for it. And there's no accumulated equity, no stability, and no long-term benefit. For families with young children, this often means frequent moves out of school districts, uncertainty, limited space, and no realistic path forward toward home ownership, even if they have steady jobs and are responsible with their finances. And here's a very important point that is often overlooked. Many adult children are not being priced out of home ownership because they're spending recklessly. They're being priced out of the affordability crisis that was created during the COVID-19 pandemic. In the early days of the pandemic in 2020, the Federal Reserve slashed interest rates and was the primary buyer of mortgage-backed securities. And this flooded the housing market with liquidity or cash, and it pushed home prices sharply higher, far faster than incomes could catch up. And the result is a generation of working families stuck renting in a market they didn't create nor can control. Now, last week I saw a very insightful post on my LinkedIn timeline, but it discussed this topic, but I could not find it later. So to whoever posted that, thank you for the inspiration for this week's scenario. So let's see how a reverse mortgage used thoughtfully could change and break the cycle of endless renting. Meet Linda. Linda is 71 years old, widowed, and owns her home outright. And she's financially stable, but like many retirees, she's living on a fixed income and carefully considers how to manage the assets she's built over her lifetime. Her son, Mark, is 37 years old, and he works full-time. His wife is working part-time while raising their two young daughters. They're paying $2,700 a month in rent and trying to save, but watching prices and interest rates remain stubbornly high. But rather than accept her son's fate of renting for years to come, Linda accesses a portion of her home equity using a reverse mortgage and gifts $150,000 to Mark to help him purchase a $350,000 home. And that gift changes the math dramatically. For example, if Mark tried to buy that same home with a 5% FHA loan, he would only be putting down $17,500.
And with today's average 30-year fixed rate being 6.5%, his loan balance would be large, mortgage insurance premiums would be required, and his monthly payment would easily exceed $2,700 that he's paying right now when you include property taxes and insurance. And in Mark's family's current financial situation, it's very unlikely they could come up with a 20% down payment of $70,000 for a conventional loan, which would, of course, lower their monthly PITI, that is their principal, interest, taxes, and insurance, bringing the payment to $2,300 a month. However, with Linda's $150,000 gift, Mark can make a down payment of more than 40% of the purchase price. That dramatically reduces the loan balance, eliminates mortgage insurance, and it also lowers their monthly payment to $1,800 a month, including property taxes and insurance. That brings it into a range the family can realistically afford in the long term.
Instead of paying rent checks that simply disappear into thin air each month, now Mark and his family are building equity instead of moving every few years or facing the possibility of relocation. So Linda's grandchildren now can stay in that same school district that they like and also gain a backyard perhaps and experience the sense of stability, staying in place. And Linda, by the way, doesn't lose her home or even take on a monthly mortgage payment because she used the reverse. She's using a portion of her home's value or equity to create a real visible impact while she's alive to see it. Now, a quick word about taxes in this situation because this question often arises. The $150,000 Linda gives her son is intended to be a gift, not income. So that helps Mark avoid paying income tax on the money that he receives. Now, in some instances, a gift given above the exemption amount can be reported using a unified credit, which is applied against the giver's lifetime estate and gift tax exemption. Now, for most families, the lifetime estate exemption is going to be far more than they'll ever use. Now, of course, this will require proper planning and professional guidance to ensure tax efficiency in the transaction. And most certainly, I want to make this very clear, reverse mortgage professionals should never give tax advice, but instead, you can involve a tax professional when you're designing the case. Now, this tends to be a broader area of interest, but for decades, retirement planning has focused on the notion that dying with the most assets or equity is the ultimate win. But is it? However, for many seniors, fulfillment doesn't really align with the idea of dying with a big hoard of cash. It's watching your children struggle less, knowing your grandchildren are safe and settled, and seeing the results of your lifetime work while you're still alive to enjoy it. And those are living gifts, and they can be profoundly satisfying. A reverse mortgage doesn't eliminate a legacy. It actually, in many cases, simply allows that legacy to be deployed earlier when, in fact, it can do the most good for the adult child and the grandchildren. This strategy isn't for everyone, but it does require thoughtful planning, transparency, and sound professional advice. But for families that are finding themselves trapped in the rent cycle, and for parents who do want to help without jeopardizing their own financial security, and for seniors who understand that legacy isn't just what you leave behind, but what you change while you're alive, well, this approach could truly be life-changing. Because sometimes the best use of home equity isn't financial optimization at all. It's watching your grandchildren play in the backyard you helped make possible and knowing that your legacy is already at work. Is this a strategy that you could actually use when you're meeting with potential borrowers next year? And another question, are you asking your potential borrowers if their adult children are struggling to buy a home or have been priced out of the market? And that's something to consider as we prepare for 2026. I'd like to know your thoughts. You can share those in the comment section below. And if you'd be so kind as to share this video if you found value in it in your LinkedIn network, we thank you for that. We do have a YouTube channel. Be sure to click subscribe and the notification bell. That way you never miss any of our latest content. And each and every week, if you want to catch up on some interesting reverse mortgage news that we curate for you here at Heckham World, you can listen or watch our weekly podcast, Heckham World Weekly. Listeners can listen and subscribe on Apple Music and Spotify. Thanks so much for joining us, and be sure to return next week here for more reverse mortgage news, commentary, and analysis you'll only find here at Heckham World. Have a very Merry Christmas and a Happy New Year, Happy Holidays, everyone.